Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Atlas Engineered Products stock so we can determine if it's a buy or a sell. Atlas designs, manufactures, and sells engineered roof trusses, floor trusses, wall panels, and windows. The company is headquartered in British Columbia, Canada, and was founded in 1999. Let's get started with the model. This is a micro-cap company, 62 million market cap. They're trading at 107 a share, and they have 58 million shares outstanding. We'll look at the ticker that trades on the TSX Venture, so all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They don't bring in that much revenue, but they do have positive free cash flow each year, 8 million in 2021 and 2022. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was negative in 2019, the highest ever in 2022 at 9 million. Revenue is a sales for the company, and that goes up each year from 35 million to 62 million. Let's look at their capital structure. 29 million of equity, 15 million of debt. They're 65% equity, 35% debt. And they could pay off all the debt with the cash on their balance sheet and still have 1 million of cash left over. They have a WACC of 13%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 115 million. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $98 million. We divide that by 58 million shares. And we get a calculated stock price of 169. They're trading at 107, so they're trading at a 37% discount. It's a buy according to the model. Simply Wall Street values the company at 168. They're saying it's 36% undervalued. Two analysts priced this stock and the average price target is 160. They're saying it's 50% undervalued. This is where the stock has been trading the last 5 years, so it looks like it's trading pretty close to its all-time high. It broke through $1 for the first time in the beginning of this year. In mid-2018, it was trading at 50 cents, and then in mid-2022, it was still trading at 50 cents. It looks like the stock has really broken through its resistance points, so there could be lots of upside potential. There are 32 companies in the same industry as Atlas. Atlas ranks 30th in market cap at 62 million. The average company is 7 billion market cap, but they have really good price multiples. Their price to book, PE, price to free cash flow, and price to sales are a lot better than average, especially their PE. So to summarize, I have them trading at a 37% discount. I rank their free cash flows 3 out of 10, their revenue 5 out of 10, and their ratios 9 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.